Welcome to Market Day Report. We've been up and trading about 16 minutes now. Where are the markets? How about the corn market? Good place to start. And we were higher yesterday. And well, we get out of the gate with May and July both in the red. However, December is a penny and a quarter higher at 4.79 1/4, and again, early trade here. Now, we did have good export sales when it comes to corn, so we'll see whether or not that propels the market a little more today. But beans, very disappointing. Marketing year low on soybeans is according to USDA's report, which came out this morning. And again, that is for, well, sales that ended last week. So it's not this week. It's a week old by the time USDA puts it out. November beans, 11.57 3/4. That's up 3 1/4 cents. Let's look at the complex while we're here. Soy meal contracts continuing that lower trend that we saw in the overnight action. And bean oil, look at that. Triple-digit gains across the board. Now to the wheat market. Wheat export sales pretty disappointing, but Brian Hoops mentioned earlier, we're not really trading that. We're trading weather. 6.12 3/4 on the July. That's up 11. How about hard red? That's really been the leader here, and you can see it's doing it again today, up 20 1/4, 6.58 3/4 on the July. Spring wheat contracts in the overnight were higher, and then over to the cotton market that hit 80 cents on the March in the overnight action, trading 79.93 right now, up 74. Brady Huck's with EmpowerAg Trading in Dodge City. What can you say right now about the row crops other than maybe this move by wheat?
Right. It's all about wheat here this morning. You look at corn markets, you look at the soybean markets, we're not really trading any new ground. But you look at cotton market and the wheat market, and we've got a little bit of a market there. So cotton trading the highest level we've seen since 2024, and wheat adding some weather premium into this market as we got some wheat acres that are in trouble out here. We got a little rain last week. Some areas did, but a lot of areas missed it, and the forecast looks a little bleak. KC wheat is one of the strongest markets. You look at the updated drought monitor, and 68% of winter wheat is in drought. That's unchanged versus a week ago, but we did see an increase in the area in intense drought, and that climbed from 30% last week to 36% this week in the D2 to D4 drought levels. So we've seen a big range in the July KC wheat contract, Tony, 535 to 662 since the first of the year, $1.27 trading range. A lot of uncertainty on production. Are we going to raise 50 bushels, 60 bushels, or will we have a goose egg or, abandon acres and not even harvest them? So lots of questions going forward on your wheat market.
Yeah, Brady, so I guess one of the questions I have here is when it comes to the harvest season, obviously we've got producers who have their own harvesting equipment. They've got their own combine here, but for those who don't, they rely on custom cutters, and you've got a custom harvester who's got to charge a little more with diesel prices. Could that affect more of the harvested acreage?
I really think so. That threshold, a lot of it has to do with, your insurance as well. Will your insurance guy dismiss the acres or allow you to go out there and park the combines and not harvest them? But if you're in the custom harvesting business, which I know a few custom cutters out there, and we've had conversations about canceling trips to Texas, canceling trips to Oklahoma, and it looks like there's some wheat acres in Kansas and Colorado that also may not need a custom cutter to come harvest them. So difficult times right now. Hope we get some rain. Rain solves a lot of things, Tony.
Yeah, it does. And at this point would be very helpful. I don't know if it can save this crop, but it would help a lot of other areas. Hey, Brady, quick break here. Let's come back and talk livestock futures. We've seen some green over on that screen. Got more right around the corner on Market Day Report. Let's talk cattle for a moment. And again, cash, $248 in Texas and Kansas this week. They haven't bought everything they need to yet, so Packers still have some work to do. How about April live cattle? It's settling in right now at 251.80. It's 80 lower. Not a whole lot of action there. The most active is June at 250.05, down $1.02. Now, this is following a day of lower trade yesterday. Now, the April feeder contract is moving higher, but the May at 370.87 is up 7. But, oh, look at that. August at 371.87. It's up down 32. But that's trading at a premium to the May contract. Let's bring Brady Huck back in. Brady's with EmpowerAg Trading. Okay, is that an opportunity, that that deferred contract at a premium?
I really think so, Tony. I think that's something that we don't always get as producers in the cattle business, is those deferred values in our feeder cattle futures trading at or close to levels that we have near term. So you look at those deferred values and they just lack a discount to the current index. November feeders currently in that 365 area and the index at 375. That actually widened out about $5 yesterday. And now we've got a $10 discount there. But sometimes we see a $20 to $40 discount out there in those deferred markets. And it makes it very difficult for producers to go out there and manage risk when you're facing that discount. It's very much like selling $6 corn in an $8 market. It's just hard to do.
Hey, before I let you go, LRP and put spreads, are those a couple of tools we can still use?
Yep, great tools to go out there and protect those deferred values, LRP, subsidized put floors. And you look at the cost of options in those deferred months, and you can create some put spread strategies that are really attractive that compete with those LRP levels. So guys, producers need to be looking at opportunities to go out there and manage that calf crop, manage the stockers they're going to run on grass this year.
Okay, Brady, great to see you. Brady Hucks with EmpowerAg Trading. He's in the Wild West, Dodge City.